Hi guys, welcome back to my channel. Hope you had an awesome holiday and happy new year to all of you. Now let's get back to business. On silver, I have to start on the monthly because it's a new month, it's a new year. It's a good time. So when we start on the monthly, you can see that the previous month was very bullish. After it reached this supply and demand level, the 17.4, around there it just shot up. And our targets, overall targets, as I said last year, were these highs over here. This is where I see price pushing to in the long term. Let's go to the weekly. On the weekly, you can see that price is, pushing up. The previous weeks had a hard time trying to go through this $24 level of supply and demand. But then finally this week has shot up. This is the first trading day of this year. So the price has shot up above that level and is now feeling this imbalance. So as it has traveled to only halfway, I still see it at least minimum completing this imbalance. So reaching 24.7 before we start seeing the market go down. Or even better is this 25.2 level. On the daily, we can see that price had pushed up, came retested this level over here, pushed up and has now broken structure since it has closed above this high. So these equal highs were taken out. If we move the daily highs and lows, the previous day's high and low, we see areas which have high volume. This levels over here. And now the daily structure is here, here and here. So it's still bullish. When we go to the 4 hour, on the 4 hour, you can see that structure has been broken here and price has traded to the midpoint of this imbalance. So let's move our levels here. The previous high is here. Now the current low, this level over here. So as you can see, price has traded up. It had been in a small consolidation here, but then it had higher highs coming in here, here and here. So there was a high probability that price would push up. So what I expect to see today is price continue with this bullish move since it has broken structure, but first it will have to retrace a bit. Now let's go to the hourly. In the hourly, we can see that price has, now we can see this consolidation better. This consolidation is here. Price was consolidating in this range and has now broken out of the range. So even before we go to the lower time frames, how I would trade this, I would wait for price to come and retest the high of this range before I buy, because you can see the structure points on the hourly time frame are here, here, and now here. This is the hourly structure. So for price to continue its up move, there has to be a retracement to at least this high over here or this high over here. And you can see this was the last down close candle that has been broken. Price has traded above it. And yeah, this is the area of high probability, because we can also see this $24 key level. If we go to the 15, what we can see on the 15 is that where this level of structure on the 15-minute time frame. Now let's look. They're here, here, and here. Why not here? Because here price didn't break above this high. It only wicked above and then traded below and then pushed up. So the main structure points are here, but on the 5-minute, yeah, this can be structure points, but then we're not going that deep. So since those are the structure points, we can draw our fibs and see where's the area with high probability of price retracing to. before continuing its up move. You can see these are the fib levels, and the 50% coincides with this $24 key level, which is a higher confluence, because at first we said on the higher time frames we wait for price to come and trade above to this top of this consolidation, which is this area. You can see the fib levels are coinciding with that area, and you can also see this key level, which also adds confluence to us buying from that area. Now let's check out the Asian range. You can see it coincides with the 38% of the fibs. So what I'm waiting for is price to retrace, maybe trade above this high, then come back down, take out orders, and then push up to at least 24.7. And if price pushes up from, let's say from this level here to this is around 600 pips, so that will be a good time. On gold, if we start on the monthly, we can see that the previous month was very bullish. This was a very large bullish candlestick, followed by this one, then to this one. Shows there's a lot of bullish pressure. On the weekly, you can see the same, and you can also see that price was trying to come and break above this 1830 level and has finally been able to break above it. So we're looking for buys to where the next level I'd see price trading to is this area over here, because it's the previous weak high and low, which was not retested. Price hadn't come back for a very long time, so that's why I'd see price going to. That is 1880, the 1880 price point. But as of now, where my farthest targets would be at this 1870 weekly supply and demand level, because price reacts at this level. So that's the safest bet for take profits. That's on the weekly. Is there imbalance? Yes, we can see imbalance way over here. So overall, in the long term, in a couple of months, I see price trading up to fill this imbalance, but that's not soon. Let's continue. On the daily, you can see that price came up, but then the momentum started to decrease. It was a big push, small retracement, small push, smaller retracement, smaller push, smaller retracement, smaller. And then it started going in this channel. So if you mark our previous day's high and low, mark it out there. Is there any imbalance? Yes, there is, left by this candlestick here. When you go to the 4-hour, what you can see is that structure has been broken. These are the previous structure points, here, here, and here. Now price is traded above here, so this is a new structure point, structure high, the previous structure high, and now the current structure low, which is here. So this is the 4-hour structure points. You can see today price just shot up above this 1830 level, which shows that price is very, very bullish. On the hourly, you can see that price is pushing up with a lot of momentum and a lot of volume. If we draw out our fibs, this structure low to this structure high, you can see that this area is the area of highest probability that price will retrace to before continue its move up, and you can see it also coincides with this 1830 level of supply and demand. Okay, so that's where I'd look to enter a trade. If we go into 15, the structure points are quite different, because here the structure points this high, this low, and this high. If we draw out our Asian range, since it's a trending Asian range, there's a high probability of price completely covering this Asian range before continuing with its move up, completely trading below this level, which is also the previous day's high and also coincides with the 1830 level, showing that there's a lot of confluence for price to come and retrace to this area, at least touch the previous day's high before getting adequate volume to continue its move up to 1870. This next level of supply and demand, my overall targets, and if price goes as planned, that's around 400 pips. So yeah, it will be a good time. So follow the charts with me. Stay tuned for more analysis. If you want to become a fund manager with FTMO, click the links in the description and have a nice time. Peace.